Hello, I'm Tia, and welcome back to my channel. I am the founder of a student loan organization called RiseRelief. This organization is founded to help borrowers pay off their student loan debt. If you are a holder of student loan debt has become a major problem in American society. It has become very difficult for student loan borrowers to pay off their loans due to the fact of the high interest rates, due to the fact of not having a great job or having a job, but the economy has caused payments to rise to the point of where we're no longer able to afford the basic means of living. And today we're going to cover another article from the Business Insider. It highlights a woman who has student loan debt well into her late 50s. It's a shame and a tragedy and a travesty of what she's dealing with. And so we're going to go ahead and read this particular article. The name of the title of this article is Student Loan Borrowers Are Pushing Off Retirement, Delaying Children, and Taking on 3 Jobs to Prep for Repayment Changes. From this title alone, we can see that there are so many different factions of life that are different from our parents and our grandparents, in which they were able to go to school, get a home, and begin to build their life, build a family with no financial strain. And so we're seeing how student loan debt is making people decide to live their lives differently than the former generations are living. The article goes on to say, after raising her kids, Kelly Ann Piscopo wanted a stable career and a steady income. She thought going to school in her 40s was the solution. So it really doesn't matter when you decide to go to school. Traditionally, most of us go after we graduate from from high school at the age of 18. But of course, over the course of your lifespan, people tend to go to college at any time. I read a story about an 80-year-old woman who graduated from Georgia State some years ago and got her college degree because she never went to school. And so this woman has started in a later stage in life at 40, which is traditionally untraditional, but it has a thought process was in her mind saying, okay, I need to have a solution to my financial problems as far as my skill sets are concerned. So therefore, I'm going to go to college so that I can begin to build my own personal income. And whatever the reason is that you decide to go to college, for whatever age, whatever your situation is in life, the reason shouldn't matter. All we know is that we're going to school to better ourselves. And so the article goes on to state that in 2014, she took out nearly $54,000 in student loans from the online school post-university to get her bachelor's degree in human services. $54,000 worth of student loans is about the amount that many of us take out in order to go to school. Actually, the average is $39,000 worth of student loans for your bachelor's degree. Many students take out that amount plus more, depending on the type of college that you decide to go to. And so after graduating, she helped run a public school program helping refugees adjust to life in the U.S., which this is some great and honorable work that she has chosen to do. Now let's pause and think, because over the course of the last 2 decades, Congress and the U.S. Department of Education have noticed that there have been some issues in the fact that Americans, multiple millions upon millions of Americans, cannot pay their student loans back in a timely manner. And so therefore, a lot of different types of programs were created in law by previous administrations, like the SAVE Act, whereas you can go in and utilize whatever type of your salary amount is, and you can pay your loans down accordingly. And so under our new administration, funding cuts under the presidential Donald Trump ended many of those programs. And actually, some of these programs just ended in July. Now, her work has disappeared since then. Okay, so what she got her degree in and the type of career field that she chose to go down, it disappeared. Now, isn't that just like many student loan borrowers? You go to school, you get your degree, and then something happens. And with this woman's case, it was the factor of her particular career field not even being needed anymore. Some people end up not even in her position, but are laid off for various reasons. Their position is taken away, or you may have ended up in the hospital with a debilitating disability, so many different things, a death in the family, and therefore now your financial income is affected to the point of where you can no longer pay on even not just your student loans, but your credit card debt, your mortgage, your rent, groceries, all of those things have a major effect. At the age of 59, so remember, she started out at 40 at $54,000, okay? Piscopo works 70 hours a week at 3 different jobs, earning an average of only $20 an hour. At the age of 59, almost nearing retirement, making an average of $20 per hour is not the American dream that she hoped for when she decided to go to school and better herself. After her 9 to 5 as an assistant insurance broker, she spends Friday, Saturday, and Sunday nights as a caregiver in a 95-year-old woman's home. Between caregiving shifts, she works at a doctor's office on Saturday during the day. She says the workload barely covers her bills. And now she's getting a new one. Covering her new bill of $95 per month would mean working another day each month, time she says that she doesn't have. She goes on to say, with everything else I have to try to figure out how to manage. I don't need one more thing, Piscopo, at the age of 59, said. At this particular age, and in any age, no one wants to have to work 3 to 4 jobs just to make ends meet. That's not a quality of life. That is a life that is filled with being tired, filled with dread, filled with work horror. That's what that is. And I am just so sorry that she has to work this many jobs in order to make ends meet. Now, the article goes on to say millions of other federal student loan borrowers are in similar situations. I don't know where you are in your situation, but all I can say is a lot of us are like Miss Piscopo. A lot of us have to work multiple jobs. A lot of us may only have one job, but the job isn't paying the amount that we thought it would. This dream of us going to college and getting this wonderful degree so that our income can go higher substantially by the skill sets that we have raised, the courses we have taken, the amount of hours, hundreds of hours of schoolwork, dedication, receiving straight A's, B's, or C's, whatever your GPA ended up being, you still put in work to get this degree only just to get out of school and not have a job, or only just to get out of school and to have a job that doesn't pay enough and you can't cover anything, let alone student loans. It is just a daunting situation that we are all in. And so once again, on July 1st, Trump's sweeping repayment overhaul, which is the RAP plan, that's new. And that's the repayment assistance plan that Congress has come up with for borrowers to remove themselves from the SAVE Act plan and join in on this plan, which is going to cause a lot of Americans' payments to jump substantially. This overhaul took effect, and some borrowers are facing monthly bills that are hundreds of dollars higher than they were in Joe Biden's SAVE Act plan. The administration has said that its goal is to simplify a complex repayment system and prompt colleges to lower their tuitions. Still, borrowers are confronting a critical dilemma: find the extra money or fall behind and risk the consequences of default, such as wage garnishment. Back in January, they released a statement stating that they are getting ready to start garnishing student loan borrowers' wages for those who are going to be left behind. And if you don't know what a wage garnishment is them literally taking your personal paycheck and pulling the funds out of your paycheck without you having to go in and pay yourself. They're going to automatically deduct the student loan payment. So if you had a payment that's, let's say, was around $300 in the SAVE Act plan, and then Trump administration came in with the RAP plan, and now your student loan payments have skyrocketed to about $1,200. And this is just a hypothetical situation. You cannot afford those $1,200 payments. the administration is going to garnish and pull that $1,200 automatically out of your paycheck. Isn't that something? And so this RAP plan is supposed to make things more simplified, but instead it's making things even more difficult for American borrowers. The article also goes on to say, and it's not just tighter monthly budgets. Business Insider heard from nearly 1,000 borrowers over the past year who said they're pulling back on retirement savings, holding off on having children, postponing home ownership, and taking on extra jobs to cover their student loan payments. This sounds like the American nightmare, not the American dream. The fact that we have to pull back on retirement, can't own a home, delaying having a family, all because of student loans, all because the economy is where it is right now, where everything is sky high. This is a problem. What are we going to do when we retire? Piscopo said. Being this particular age with student loans is really daunting. Again, she is 59 with this amount of student loan debt. She raises a very, very great question, very substantial question for those that are missing out on retirement, missing out on building for their future selves, simply because student loans don't affect just the 20, 30, 40-year-olds. It's affecting the 50-year-olds, the 60-year-olds. It's affecting everyone. And so this is the reason why I have decided to start RiseRelief. And I want you to listen to me very, very carefully. This company is carefully curated for you and I to get out of student loan debt, because we can no longer depend on the U.S. government to help bail us out. They bail out who they want to bail out. They bail out the corporate companies. They bail out whomever is of their interest. We are not of their interest, because they're going to continue to say, yeah, you guys still got to pay on this debt that you have signed for. But no one is able to pay their loans because of how the economy is. And wages are not matching what we are paying for in debt all across the board. And as you know, the United States is a nation that's founded on debt. Everything is in debt. The country itself is in a whole lot of debt. The government is in debt. Everybody's in debt. And yet they have these rules for the lowly American citizens like ourselves. And if we don't abide by those rules, they garnish our wages. So RiseRelief was founded because what we're going to do is we're going to help each other get out. We're going to bail each other out, and we're going to do that through contributions. I am building a website right now as we speak, and this website is going to put us in a line. What you're going to do is you're just going to sign up. You're going to make a monthly contribution. We're bailing each other out. Make a monthly contribution. Your name will go in the queue in the order that it was received. And once your name comes up according to the amount of money that's in the RiseRelief pool, we will call your loan servicers and pay off your student loan debt with no strings attached. I'm talking federal loans, private loans, and even if you went to trade school, we're going to pay off that debt. But we have to work together to do it. And so if you continue to subscribe and follow and like this channel, listen, your life is getting ready to change. How does it feel? How would it sound? Just think about it. Having freedom, financial freedom. I know that sounds good to me, and I can't wait. So please continue to follow RiseRelief, and I will see you in the next video.